All right, buddy, let's get rocking and rolling. So, everybody, I have some tension here, some stress. But hey, welcome to our weekly recap. This is Trader Travis. My partner, Prophet Peter, is on the line. Average, regular, working individuals showing you that you don't have to have a PhD from Harvard to succeed in the market. You have all these naysayers saying, "Oh yeah, the investors, the professionals, they do this all day and they're so smart and they spend all this money. How do you think you can beat them?" We're showing you that, hey, average people can beat them with the proper blueprint. Of course, everything we're sharing is for educational, informational purposes only. We are not giving you investment advice, just sharing what we do in the market each week. So Peter's going to go this week, cover the market, some of his trades. I will end because I have a story and some shocking news for you all. And before I forget, this is the last month of our recaps. We take our annual winter break in December. This is the last month of recaps for the public, indefinitely. Next year, we talked about in the last recap, next year we're only doing these recaps for Success Academy members. So if you're public, you're not part of a member, we highly encourage you to join, not just for the recaps, just for the education and knowledge and seeing how we're beating the market. And then next year, what I'll do is replace these recaps with something else for the public. So I'm not just going to take something away from you and not give you anything in exchange for it. So I'm going to replace these with some other weekly videos that will still educate you and teach you about trading in the market. So with that, let me go ahead and turn the floor over to Peter.
Okay, thanks, Travis. Hey, real quick, I forgot to tell you this. So next week, though, I am going to be away, and I won't be able to do a recap because I'm going to be on a golf trip. Sorry.
Oh my gosh. Don't get me started on that. So, traveling the world, living it up. Okay, no, that's fine, man. We'll work it out. I'll just they can just listen to my voice next week.
Okay.
It'll be low views. They'll be like, I don't want to hear Travis. Let's just show up for Peter.
That's not true. Okay, all right. So I'm going to cover the general market. So one of the things I do want to say, and I'll shout out, I think it was Brian or Chris from the Success Academy was talking about, hey, he was watching our last weekly recap, and he said something kind of caught my attention. Peter's out of the market, but we had a weekly green on Market Club, so he's trading what he sees, not what he thinks. And I said to him, that's fantastic. I was a little skeptical as to the move on the market because volume was kind of low when the market was moving up. But as you can see from the chart here, we drew these lines out a few weeks ago to show that the market was in a channel, and it has clearly broken through that channel to the upside. So I am very happy I can't remember if it was Brian or Chris. I'm really happy because I knew they placed some trades and I wanted the market to go up for them. I didn't place any trades. It wasn't because I was nervous about the market or I was a little skeptical of the move because of volume. Volume's always something I look at. But for me, it was because October frustrated me. I made some really dumb mistakes. It frustrated me, and the easiest way for me to unfrustrate myself is to stop trading. So I just merely watch the market, see what it's doing. I'll watch any long-term trades I have. I'll go back through templates, read through stuff. But I don't place any real new trades, especially not any type of like short-term directional trades. So I'm glad, Chris, that you can see from the market, it has shot up, and actually volume has increased. You can see volume kind of picked up. A couple of the down days, we did see some larger volume, but immediately following a large volume down day was a large volume up day. So that's a good signal that institutions are still investing money and the bulls are technically still running the market and the market's going up. Will it continue? Who knows? We'll see. The only thing I do look at is these two moving averages getting farther and farther apart, and they tend to revert back to their mean. So they'll tend to come back to each other. So just be cautious of that. If you're in trades, just monitor your trades, follow your trade plan. So that's pretty much my view on the general market. I'm not going to predict what it's going to do because we don't do that. The only other thing I want to cover is AT&T because this is a trade I'm in. So, and let me bring over my spreadsheet because I was kind of excited because October was such a bad month, and November, these are booked profits. Let me get rid of that. These are booked profits for November. So you can see I wiped out my loss from October and made a little bit of money. So I made about $800 between the 2 months, which is great because October really irritated me. I was up a lot in October, so to be down 1,700 over dumb mistakes really bothered me. So, but I did book some. So I sold. I want to cover AT&T because this is the big one here. I sold 5 covered calls on AT&T at $38, and this is something that this is where patience triumphs over trying to get things done quickly. And I'll go through a real short synopsis of this. 3 or 4 years ago, I really learned what I'm doing today through the Success Academy. A year and a half ago, I bought AT&T. It was when I retired and transferred my TSP into Thinkorswim, and I purchased AT&T shares. So now AT&T being at such a high run up, I'm now able to really capitalize on the purchase of those shares. I was capitalizing all the time because I was able to sell covered calls here and there on those shares. And I was also able to get a nice dividend because AT&T pays a nice dividend. Well, now that covered call that expires next week has a good chance to be exercised because it's a $38 covered call and it's trading at $39.50. The beauty of it is I only paid $34 for those shares. So if those 500 shares get called away, that's going to be an additional $2,000 that will go into my account. So my November will then jump up to $46.63. Now, what do I do if it doesn't get called away? Well, the beauty of if it doesn't get called away, if AT&T drops below 38, I just turn right around and do it all over again. The fact that AT&T is above my cost basis, it makes the perfect opportune time to sell covered calls no matter what the stock is doing. Usually we like to sell covered calls when the stock is falling because there's less chance of being assigned and you just get to keep that revenue. But when the stock moves way above your cost basis, now you can sell covered calls and reap the benefits of both sides. If it gets called away, I make an additional $2,000. If it doesn't, I just rinse and repeat and keep doing it. The beauty of that, 500 shares over the year is only $1,000 in dividends. So I double my dividend payment for the year of 2020 already if these get called away. And then I can do the Buffett strategy, which is my next order of business that I am formulating for next year or the year, well, pretty much the 1,000 shares I've already been called away on AT&T at my cost basis. So I haven't made any extra cash when I got called away, but I didn't lose anything. I just kept the covered call revenue, which is nice. So now I'm targeting the 15 January 2021. Either I'm going to target the $30 price point for AT&T. This is kind of a Buffett strategy for us. So if AT&T drops to $30, in January, I'll get assigned, which is good because then I'll own the shares again. And if it doesn't, I'll just rinse and repeat. So that's kind of what I'm looking at for my future on AT&T. And then I'll start getting into more trades, but they'll probably be 90 to 120 day credit spread trades. And when I start getting into those, I'll cover them. But that's it. That's pretty much where I'm at. Travis?
Yeah, sorry. I was like stretching and I had myself on mute there. Sorry, buddy. All right. Okay, I'm ready. Can I go ahead and take the controls over real quick?
Yep.
So what I want to do is Peter talked about one thing, and I'm going to wait to share my screen first. He talked about trading fast, is what we call a trading fast. He took a break. This is one of the keys, at least one of the keys I've discovered to success, and you don't hear a lot of people talk about it. A trading fast is where you take a break from trading, right? There are two primary reasons. One, if you're losing money. And honestly, I started doing it when I make a lot of money, because here's what I discovered. When I make a lot of money, a perfect example, U.S. Investing Championship, right? Made a lot of money, up 46% for the year. Your ego picks up. oh, I'm so good at this, right? You can't do any wrong. You start over trading. Everything you touch, you think you're going to make money. Next thing you know, you're losing a ton of money, right? So I found after a string of winners where I like boost my account, and you'll see a perfect example of this here in a sec where I share some shocking news, where you have a huge run up and you have results that far exceed your expectations. Take a break, like literally cash the chips out, walk away, because 9 times out of 10, it always ends bad. You wind up giving that money back and some. So I've learned, hey, if I get lucky, walk away from the table, Travis, take the money and run. It's easier said than done, but that's what I do. The second reason we take trading fast is when we lose money, you get emotional, and that's when you're more prone to revenge trading, trying to get back something the market took from you. And you place a trade that starts losing money, and it compounds the losses you already took, and you get even more emotional, and you bet even bigger. It gets really ugly really fast until you've blown out your account. So if you lost a lot of money and you notice you're noticeably upset, the percent doesn't matter, it's what you feel. If you're noticeably upset, Peter just showed you a professional's approach. Walk away, take a break, wait till your emotions are settled, then come back so you can think clearly. Choose intelligence over anger, because when you're angry, I can promise you, in my own marriage, when you're angry, you do not make smart decisions. So you have to step away and come back to where you're calm. All right, next. But anyway, second thing he talked about is predicting. Now I want to show you. Can you see my screen, Peter? It shows Twitter.
Yeah.
Okay,
Yeah.
predicting. This guy, Mark, he won actually the competition I'm in. He won a few years back. And if you see over here to the right, he is author of Trade Like a Stock Market Wizard. I think I have that book, one of those books. He just wrote a new book. He was in Stock Market Wizard's book, one of the classics of investing that I read when I was first learning this. Anyway, he made somebody asked him for his upcoming prediction, what they think the market is going to do, and he laughed. He was like, great track record's not built on predictions. I never try to predict. I just stay with the trend, play probabilities, and manage my risk. And I was like, that's exactly what we talk about. Trade what you see, not what you think you're going to see. What is the market going to do, Travis? I don't know. I don't care. Like, we don't try to predict. We can have opinions and stuff, but we don't want to put our money based on our opinions. We want to put our money based on what the market is doing. And I think it was Brian, Peter. He saw a template, he traded it, and he's making money right now. So kudos to you. Even and other people's defense, even those who saw the channel, I don't have my channels drawn anymore, but even those who saw the channel and you place a bearish trade thinking that channel will hold, you're even not wrong, because you traded what you saw. You saw a channel, the channel had played out. You just had bad timing. Simple as that. It's not like you were wrong. You traded what you see. So kudos to you too, even though you lost money. Kudos to you. All right. So I do hope you lost money and then you traded what you saw. You're like, well, the channel didn't play out. Now let me get into a bullish trade. So I hope you didn't let that loss influence you. So kudos to both of you. So I just wanted to talk about that, Peter. Two important points. Now, before I share the shocking news, quick story. When I first learned this, most people knew I grew up American poor, not third world country poor, but American poor, in a house with no running water or bathroom. And we had a 5-gallon paint bucket as we used as a toilet, right? We didn't have a bathroom. I didn't take a shower until I think I was 12, and I didn't know how to work the knobs. It was like 3 knobs. I was totally confused. So I just started from, I don't know if the knobs were, I started from the left. And if your shower is like most showers, the left button is the hot water. So I just turned on the left one and the shower turned on. I was like, oh, cool. I figured it out, right? And I jumped in and installed it myself. So that's my experience of taking a shower for the first time. But anyway, I'm saying all that to say I grew up starved financially, right? I saw these rich people. I wanted money. So when I learned how to trade, first I learned real estate investing first, and I discovered, hey, it's a way to get rich quick. When you're starved financially like that, you usually are greedy and aggressive. You want to make money really quick. And before we hit record, I was telling Peter, there's a difference between crockpot learners and microwave learners. Microwave learners want to learn everything as quick as possible, make as money as quick as possible. They just rush. They don't want to take time. If you tell them, hey, it's going to take 1 to 3 years to succeed at this, they're like, whatever. They either quit and go find somebody else that caters to that microwave thinking and tells them what they want to hear, or they politely ignore you and go do what they want to do anyway, right? The crockpot learners are like, okay, I'm going to take my time, and how long it takes me to learn, it matters, but it really doesn't matter. What matters is if I learn it the right way. So they take their time and they slowly practice and they slowly absorb the concepts. Well, I was a microwave thinker, a microwave learner. A lot of people are. Over time, though, you settle down and you recognize that you can't rush mastery, right? As I was telling Peter, to get to the point that we're at, it just takes time. There's no way around it. You can't rush it, right? You have to adopt the Crock-Part learning style where you just take your time and make sure you learn the principles correctly. And then the profits eventually show up, as Peter just demonstrated. His profits are showing up. They showed up immediately, but they're showing up more consistent now, several years down the road. And that's the point. Next point. The reason I'm sharing this is I haven't got emails like this in a while, and I don't talk about this a lot, but sometimes I will get emails from people that are like, hey, I just lost my job and I'm thinking about being a full-time trader, right? Don't do it. It is the worst decision you could ever make. I am one who did think that, never made over 100 grand in my life in corporate America, but for some reason I thought I could take 2 grand. Year later, I'd be a full-time trader trading for a living, right? There are a lot of people who have that thought. It is such a pipe dream. I have not seen it happen. And if it does happen, you'll eventually crash and burn because, again, you can't rush mastery. It just takes a while to learn it. You may have initial success, but some failure will come down the road and it will take you out. And then it's up to you whether you want to get back up. So if you're in that position, you lost your job, you're in a pressure to make a lot of money quickly, give up. It's not going to work. So just stop rushing. Take your time. You can't become a full-time trader in a year. Well, I won't say can't. Gosh, if my kids heard that, I'll get in trouble. It is very difficult to be, because can't is a bad word in our house. You will literally get punished for saying can't. So it is difficult to become a full-time trader in a year. You can, but it's difficult, right? So I haven't seen it. I've seen 1 to 3 years because, again, you can't rush mastery. So that's my tip for the day. Next point here. Had a brain cramp there. I was like, what was I going to say? It sounded great to say.
Like I'm like, was I supposed to say something?
Oh my gosh. Now I'm just leading up to the shocking news. The shocking news. There is no transition to this. Is Trader Travis is calling it quits. Peter made sure I made the distinction that I'm calling it quits for the year because he was like, oh, you're going to get some nasty grabs. I'm like, yeah, you're right. Let me clarify that. I am calling it quits for the year. I am shutting down all of my portfolios for the year. I'm done. I woke up last week with the feeling of just get out. Not that it's predicting a market crash or anything. I don't know. It's just I didn't recognize I had all this built up emotions inside. I told Peter, I was like, oh, I'm being transparent here. I was like, when I close out my trades, I literally teared up. I was like, almost cried. I was like, oh my gosh. Like, I didn't realize I had so much emotion built up in my portfolio. It's been a really tough year for a lot of reasons, right? So after I closed out all these positions, I had complete peace, like this weight lifted off my shoulders. So I was just talking about this cramp right here, this tension right here in my shoulder. And I was like, wow. I was like, I felt better. I was like, okay, now I know it's the best decision. And that little phrase I just said, I almost cried. Think about that. That burst the myth. And I wrote this down. Oh, no, I didn't write this down. I had it in my notes. That burst the myth. A lot of people say that you don't manage a paper trading account the real way you manage a real money account, a virtual account. So what you're looking at, the trades I've been placing this year are, at least this year, virtual. Last year, they were real money, but I used my real money account for the competition this year, the U.S. Investing Championship. So I switched over this 10-minute income trader case study to a virtual account, right? And I just cried, and I'm managing a virtual account, right? A lot of people think, oh, it's a paper trading account, I won't pay attention to it. I'm like, that's a choice. I choose to manage my paper trading account like it's a real money account, right? Smart. And I'm crying over paper, right? Because this is a skill to me. This is real. The same people who are like, oh, if it's a paper trading account, I won't pay attention to it, so let me invest real money, which is reckless when you don't know what you're doing, right? Those same people who say that are usually the same people who ignore their real money. It's a habit. It has nothing to do about paper or virtual. Is what T. Harv Eker says. How you do anything is how you do everything. It's a habit you have. You like to ignore your money. You like to not pay attention to things. No, I manage my virtual account like it's a real money account. I mean, obviously, if I'm almost crying over paper money, right? But anyway, here are the end results here, 118%. And this can only go up. It only can go up because I have some trades open, like 3 or 4 still open, but I have a max loss factored into this performance. So this 118 assumes I hit max loss on those trades, which is highly unlikely. Like Apple's already up $2,000 profit. So when I add in that profit, if I close it out, which I think I'm going to close it out when we finish recording, if I close it out, this 118 is going to go up. I also have 2 more personal contributions or God contributions to add to this account. So this performance will go up a tad bit before I wrap up officially for the year. But this is where I'm at. So I wind up more than doubling my account this year. It's not all trading performance. Thank you, buddy. I appreciate it. You can see right here, I broke it down this year. This is the first year I broke it down so people can see that growth is not all trading performance. It's, personal contributions plus trading performance. And so this is where I'm at. Market Club options, if you're watching this, you're part of that program, I'm most likely going to shut that down too because I'm giving Market Club options program a facelift. So I'm going to be recording new videos. And so shutting down that portfolio gives me the mental space to record those videos and not have to worry about managing trades and things like that. So that portfolio only uses one strategy. So it didn't have like a double your account growth, but it still did pretty good. According to my last update I did. Let's see. I think that's it. I'm calling for this is what I call my Oprah exit. I don't know if that's still in the training. I used to talk about it. It's something called the Oprah exit. You cash out when you're on top, right? She quit daytime TV while she was still on top. Like some people, like boxers. I used to box in the military, right? A lot of boxers are on top and then they quit like after they become old and outdated and they start losing a lot of matches, and then they quit, right? Oprah was like, nope, I'm like queen of TV. I'm calling it quits, right? So that's why I call it my Oprah exit. You quit while you're on top. So I didn't wait for this nice gain to go bye-bye in the market correction. I'm like, nope, I'm doing good. Let me take my profits and run. When I talked about earlier, I am on a trading fast for the rest of the year. Only trades I'm doing technically not true, but I'm not really going to manage this portfolio. The trading for a living portfolio, the larger one I started this year, I left those trades open so you can see, and they were almost the same trades as the 10-minute income trader account. So I left those trades open so you can see how it would have played out if Travis left his trades open. That account is only up 35% growth. But again, but I have open trades. I have a lot of open trade profit I haven't booked yet. As a matter of fact, the 10-minute income trader performance looked like this before I cash everything out. So that shows you how much open trade profit I had at risk. And I was like, yeah, I don't want to lose that. What pushed me over the 100 though, early going back here, is I sold my stock insurance. And so that was already factored into my performance. I had already paid for it. So it was almost like getting a $4,000 or $5,000 rebate back, and because I didn't need the insurance anymore, so I just sold them back and got some of that money. I recouped some of that money. They were at huge losses, but I recouped some of that money, and that pushed my performance up to 118%. Same thing here. If I close out my insurance trades and things like that and take my open trade profit, this should bump up to probably about 80%, 6 or 7%, anywhere from around there. So that shows you how much open trade profit I have. So that's it. So I'm casually managing this. I'm not going to it's all automated, hands off for me. I don't do anything with this. I'm just going to let this play out, and I'm going to shut it down. I'm not going to do this trading for a living next year. I'm just going to focus on 10-minute income trader and one-on-one clients. I'm going to help them with their larger accounts, and that will take the place of this trading for a living case study. All right, looking at my notes here, that is all I have. So that's it. I don't have any much. I've talked a lot, and I've talked really fast. I tried to slow down, but I apologize. I forgot about that. Somebody was like, you talk too fast, Travis, can you slow down?
Yeah, hit the pause button and rewind.
Yeah, I was about to say, this one you have to rewind. I do apologize. I'll try to talk slower next week, but we're on a time crunch in these recaps. We try to keep our talking to 10 minutes each person. So you have anything else? Any final takeaways, Mr. Peter?
Nope, I'm good.
I'm good too. So next week, Peter won't be with us. You'll just have my ugly mug. I'm sorry, but I'll try to make it interesting for you all. All right. You all take care. We'll sign off. No parting wisdom this week. We're just going to call it quits. Pun intended. Yeah. You take care. All right. Bye-bye.